Okay, so you know what? We are going to get started. So listen, I wanted to thank everybody for registering for tonight's event. Listen, I know it's a Wednesday evening and you guys could be doing something else, but guess what? You're here with me. So I appreciate that. Now, listen, I've been at webinars before. There's lots of distractions, so please, if you guys don't mind, just turn off your phones, Twitter, Facebook, all the other social media stuff, and just give me your undivided attention. And what I'm going to do, I'm going to try and kind of cram everything in under 45 minutes. Okay. So tonight I am going to be talking about joint ventures, and I'm going to be talking about creating like a win-win scenarios for both parties. And for the people on the call that don't know me, let me share my story with you. Okay. And where I started, the success that I've had, but more importantly, and I always say this is really important, is the failures that I've had as well too along the way. Okay, so with that, let's kind of get into it. Um, so who am I? I started a club back in 2010, which was called Smart Home Choice. And here's the interesting thing, is that when I started that club, I knew nothing about real estate investing. It was probably one of the scariest things I've ever done in my life. And here's an important saying, and I heard this along the way, was that discipline weighs ounces and regret, it weighs tons. Now, if you have an idea, here's what I want to say with you guys is that, don't wait, just start today. And here's what I did. I woke up earlier, I worked harder, and essentially I stayed up later. Because listen, life is not designed to give you what you deserve. Um, sorry, life is designed to give you what you deserve, but not what you want. And that's a really important thing to understand. Okay. 2 years later, I decided to get my license. The first year of me having my real estate license, I got Rookie of the Year. The second year, I got, amongst the top 5 agents in Durham region for Right at Home Realty. And then the third year, I received the President's Award, and I also received that this year as well too. And this year, here's what I'm doing for myself: is that I'm pushing myself to get to the highest award that my office can actually offer. Now, I say this not to brag, but really just to impress upon you that hard work, focus, and dedication can and will pay off. And here's another thing that's important as well too, is that the same wind blows on all of us. You know, it's how you set your sails is what's going to determine where you end up. Okay. Now this is probably my most favorite thing to do, which is my monthly podcast. Listen, how fun is it to be able to sit down with some of the best experts in the industry and ask them questions on essentially how to be successful. So here's what I'm going to be doing this year. And I want you guys to keep an eye out for my podcast because I'm going to be making some big changes to this year, and I'm really trying to see if I can take this to the next level. And I would say, out of all the accomplishments that I've had over the years, this is probably one of my biggest ones because I hated writing. Go back to high school, I wanted nothing to do with writing books or doing essays and all that. And the first book that I wrote was the rent to own book. And this was actually one of the first strategies that I implemented. Now, the hard part when I wrote this book was that nobody wanted to publish me because guess what? I didn't have a track record. So here's what I had to do. I had to start my own publishing company, which wasn't a very easy thing to do 6 years ago. And essentially, I just published my own book. And I'm not sure if you guys have seen or realized what I just recently did, but I also just published a new guide, which is tenant screening made easy. And the reason why I decided to write this particular book is that a lot of investors want to get into real estate investing, but this is probably one of the biggest reasons why they don't. They're scared of tenants. And I know that when I first started investing in real estate, or actually before I did, this is one of the reasons why I didn't do it was because of tenants and I heard of all the horror stories. So it's absolutely free. You can go to my website, smarthomechoice.ca, and you can download it now for free. Okay. Now, the most important thing, is this. This is my why. And for you guys that are on the call, you guys got to go find your why as well too, because that's what's going to allow you to push through and to persevere. And I do what I do because of them. Now, why is a joint venture a great strategy? I'm sure that's the reason why you guys are all here today. And I'm going to share with you why it helped me to get to where I am today. You know, I was able to quit my full-time job in 4 years. I was able to acquire close to 30 homes in 10 years. Now, I've sold off a few of them because of the first strategy that I implemented, which was rent to own. And like I said earlier, if it wasn't for joint ventures and me getting a good grasp on it and really understanding how it works, I would probably still be at TD today. Okay. Here's what it's also done as well too for me. Allowed me to take more vacations. I'm actually going on vacation a couple of days from now, so I'm pretty excited about that. Paid off all my debts. Now, not my good debt. I've got lots of good debt, but all my bad debt is all gone. It's all been wiped out. And I would say probably the most important piece is that now I feel secure that I've actually saved, a fairly healthy retirement. And the thing is that, a lot of people, when they retire, end up having to go back to work. And the main reason is because guess what? They just didn't save enough money. Now, let me kind of jump into my story and where things started back in 2008. Okay. And at that time, I was working for TD Bank and I'd been with them for a number of years. And when I initially started, I loved what I was doing. But if you guys remember back in 2008, what was happening, that was a huge financial meltdown. The US was severely impacted by it. But if you remember back in Canada during that year, we kind of got through it unscathed. But what was happening at that time was there were a lot of people that were actually losing their jobs. And I'd actually gone into work, and this was a particular Monday, no different from any other Monday that I'd gone into work. Sitting in my cubicle, I see one of my coworkers get pulled into the office, and he comes out with the pink slip. And I was like, okay, what's going on here? And one by one, all day long, my coworkers were getting pulled into the office and they were all getting walked out with this pink slip. And I can tell you, when I saw this going on, I was scared. I was nervous. I didn't know what was going to happen because I just recently purchased a home. I got two young kids. And if I lost my job, I'm losing my house. Okay. Maybe even my wife too. She might have maybe kicked me out. Okay. But, but anyways, 4 o'clock rolls around. The manager comes out and he looks at us all and he goes, okay, guys, that's it. Everybody that is still here is not going to get fired. And as I'm telling the story, it's actually bringing back those memories as I'm talking to you right now. And I remember driving home and I said, never again will I allow someone to be in control of my financial future or freedom. And and I'll tell you this as well too, is that, you know, I was at a point in my life where I also felt a little bit disgusted where I was. And that can be a really good emotion. It really can be, but you've got to use it to motivate you. And that's what I did. So here's what I started doing. I got home. I didn't know what I was going to do, but I know that I wanted to be able to stand on my own 2 feet and not depend on anybody else. So I got into currency trading. So I started trading the US dollar and the euro, and I was waking up 4 o'clock in the morning and I was trading the yen and lost all kinds of money in that. Then I got into commodities, started selling oil and soya bean and wheat and lost a ton of money in that as well too. Then I was like, okay, cool, look, I think I got it. Then I got into stocks, started doing some day trading. I really started to understand, the difference between a bull or a bear market and support levels and resistant levels and, trading ETFs. And guess what? Lost a ton of money in that as well too. And I put myself in a ton of debt. And I knew that my corporate job wasn't going to be able to bail me out of the mess that I got myself into. And the reason why was because there was more month than there was money. And I needed a solution. I needed a solution real fast. And here's what I did. I ended up having to go to my bank. And this is the third time that I ended up having to do this and take all of my debt and consolidate it into my mortgage. And I remember sitting in my financial advisor's office, and she's looking at me and she's like, "Look, you have no idea on how to manage credit cards, um, lines of credits, home equity lines of credit, all that stuff. So we're taking it away from you." And I'm like, "Yeah, you know what? Good. Please take it away from me. I want nothing to do with it anymore. I tell you what, going forward, I'm just going to buy everything with cash." And she left the office, and I can tell you this is that that particular day is when my whole entire life changed, because that's when I had my Oprah Winfrey aha moment. And here's what I did. I looked up and I saw this index chart. And I'm sure a few of you that know me have heard this story before, but for anybody that's on the call and you haven't heard this story, um, what I realized was that inflation was something that I just could not outpace. And when I took a look at inflation over the course of, say, 40 or 50 years, on average, inflation was, anywhere between 2 to 3% to as high as 20%. But if you average it out, it was 5%. And then I quickly did some math on my raise at work. And in the previous year, I got $1,000 raise. And I did the math on that, and I realized that, well, hold on a second. If I made $1,000 based on my current salary, well, my raise was like 1.3%, which is less than inflation, and there was no way that I was going to be able to outpace it. So here's what I did. I really kind of started doing some soul searching, and the first thing I did, okay, is I turned this off. I got rid of cable, and I started to change my philosophy. And the very first thing, and my brother brought this over to me and shared the, if you guys have ever watched The Secret, that was really the changing point in my life. And then from there, I got into Jim Rohn, and I'm sure a few of you guys that know me have heard me talk about Jim Rohn. And Jim Rohn, if you don't know who he is, look him up. Great philosopher, and he was actually Tony Robbins' mentor. And then from there, learned about Brian Tracy, read Robert Kiyosaki's book, and on and on and on and on. And then my whole entire vocabulary just started to change. It's not what you get, it's what you become. Help enough people get what they want, and you can have every and anything you want. Don't start your day until you finish your day. Don't wish it was easier, wish you were better. Don't ask for less problems, ask for more skills. And those are the things that now started to change who I was, my philosophies and the vocabulary that I started using. And then right after that, here's what I did. I went out and bought my first investment property, because then I started to believe in myself. And I purchased this home back in 2008. And here's the funny thing with this is that I was brand new to real estate investing. I had no idea what I was doing. I had no coach, I had no training, and I had no real estate investing education whatsoever, but I just jumped in. Okay. From there, I bought my second investment property, and this one was out in Scarborough. And this is where my early headaches started, right? I was the landlord. I was cutting the lawn. I was doing the snow removal. There was all kinds of issues in the property that I didn't realize when I purchased it. And here's what ended up happening really quick. I ran out of cash very fast. And I found myself stuck, didn't know what to do. And I also didn't know how was I going to continue to grow my portfolio, especially if real estate investing was going to be something that I wanted to continue to pursue and to, grow my portfolio and my retirement and my savings. So here's what I had to do. I had to go back to the drawing board. I had to do more investigation, more homework, more research to figure out how do I break through that barrier. And here's what I realized very quickly. And this is the best way that I can illustrate this for you guys, is that let's say if you had a Ferrari, okay? If you guys like Ferraris, this is gonna you'll get a good understanding of what I'm trying to illustrate here. So you got a Ferrari, you're on the back roads, and let's say now I've got a Pinto, but I'm on the freeway. That Pinto is always gonna beat that Ferrari in the back road. And the reason why is because it's already been built. And what I did was that I then had to go out and find somebody that could walk me down that path. And it's very simple. Here's what it comes down to. I mean, look, if you want to be wealthy, study wealth. If you want to be healthy, study health. So I got myself a mentor, somebody who could hold me accountable, somebody to show me the pitfalls, somebody to guide me through the minefields. And and once I got that mentor, once he started to guide me down that path, he changed me from this. Okay? He taught me that I no longer had to use my own money. And that was such a weird concept to me at that time. And I learned very quickly that um, you know, use OPM. And it's not as a drug, opium, but OPM, other people's money or the bank's money. And I changed from trying to take money out of my own bank, and at the time I didn't have much or much left, to this, meeting people over a coffee, attracting money and buying homes with their money or the bank's money. Now, some people may look at this and say, well, yeah, Gary, you know what? It seems to be one sided, and it's not. And here's what I'm going to do for you guys this evening. I'm going to break that glass ceiling for you, okay? And I'm going to share with you how to do this and how you can make it fair. Okay. So I hope you guys are with me so far. Okay. So what is a joint venture? I'm sure most of you on the call know what it is, but let me kind of break it down so that you guys really understand it. And maybe, there are people on the call that don't really kind of grasp it or understand it. And that's completely fine as well too. So essentially a joint venture is when two or more people come together, number one, to form a temporary agreement for the purpose of carrying out a task or a project, number two, and then number three, for a specified period of time. Okay? So what's the most important part of a joint venture? What's the most important part of this here as you guys look at the screen? Is it the money, is it the people, or is it the deal? And I know when I first looked at this, I was like, well, it's the money. You need the money to be able to get the deal. But it's not. The most important piece out of this triangle is the deal itself. And this is how I started my rent to own business. And if you haven't heard or seen this before, I learned this from a really good friend of mine, Stefan Arnio, who wrote the book Money, People, Deal. And if you don't know who Stefan Arnio is, check him out. That book is a phenomenal book. It really opened up my eyes to a lot of great ideas. And so here's what I did. Okay. I got really good at finding the people, right? Which are, in my case, was rent to own, was the tenants. Then I got really good at finding the deal, which was the house. So then I took my tenants to go out and look for the home that they wanted. And after I did that, all I had to do was go out and find the money. Okay, because look, I was now bringing 2/3 of that formula to the table, and all my partner had to do was bring 1/3, which was the money. And then here was the cool thing about it, was that I was willing to share 50-50 with my partner. And the last time that I've ever seen anybody, go into something where they're bringing in 1/3, but then leave with 50% is a marriage, right? So when you really look at it this way, me bringing that to the table, my joint venture partner was happy. He's like, hey, look, all I got to do is bring that 1/3. Now I know you guys are probably thinking like, yeah, okay, Gary, you know what? It sounds easy, but what's the secret here? Like, how do you really get to do this? And I want you guys to understand this particular model. So if you got your pens and your paper, just jot this down because this is really important. The next couple of slides that I'm going to go through. This is the 4M model. Okay, so there's four pieces to this. There's the money, which is the investment capital, the mortgage, which is somebody who's going to be able to qualify for the property, the management, which is the day-to-day management or the bookkeeping, and then number four, the mastery piece of it, which is the real estate expert. Okay. Now, take a look at this chart here. Okay. And the numbers that I'm going to put up on this particular screen is the weighted value for each of these particular categories. Okay. So let's say now I went out and I found the investor, okay? And they've got all the money. And we found a home, we'll say it's, $500,000. They're putting in the money. They're putting in all the money. Now, they're not putting in 20%. That 20% represents the value of the money. Okay, so I want you guys to really understand that. Okay, it's not the 20% down payment, it's the value or the weight that I'm putting on that. Number two, they're going to qualify for the mortgage. So for them to qualify, I'm also going to put another weight on that, which is 20%. So that's what it's worth. Okay. Now I'm going to manage that property. So I'm going to screen the tenants. I'm going to deal with any phone calls. If there's any maintenance or repairs on the property, I'm going to deal with all that. And that's going to be 30%. Okay. And then the last piece is the mastery part. So me, being the expert, going to seminars, doing the webinars, having the team, and I'm going to give that a 30%. So when I look at it, okay, this is what the split would look like. I would get 60%, and then my investor would get 40%. Now, I only did that as an example, but what I really want you guys to understand is that typically what you would see in something like this would be a 50-50 split. Okay, that's normal. But what I'm trying to hit home with here is that I don't want you to underestimate the value of the real estate expert. Okay, and here's a phenomenal slide. If you got your camera, take a picture of this because this is really important. Okay, so take a look at the bottom piece here. So the person that's bringing in the money, that's all they're responsible for. Okay, that's it. But look at what you are bringing in, the expert. If you're the expert, okay, you have to know the real estate agent, and you got to have the mortgage agent, and the lawyer and the accountant, and understand the bookkeeping, all that stuff. This is the top part of this screen here is what you're responsible for. So now you're understanding why the expert piece is not to be underestimated. Okay, because really at the end of the day, your joint venture partner, maybe they have a full-time job, maybe they don't have time to be going out and looking at properties and all that stuff. So you can handle all of the other parts of real estate investing for them. And that's why the expert is a piece that you don't underestimate. Okay. Now, I'm going to go through a couple slides here. I'm going to change it up a little bit. And really what I want to go through here now is just a couple things on a joint venture agreement that you guys need to pay attention to. So for the joint venture agreement, when you're doing the split, I've only got two names here. Obviously, you could put a third or you can put a fourth. But what's important on this particular part of my joint venture agreement is the initial capital investment. So what's the percentage that you guys are putting in, number one? And then number two, what is the percentage of interest in that property that you're going in on? Okay. Another important piece of a joint venture agreement, obviously, is the amount. So now that you've already put in the percentage, now you have to know, well, what is the amount that you're actually putting in for each party? So maybe joint venture A is going to put in 85,000 and joint venture 2 is only going to put in 5 or maybe he's putting in nothing. But you want to make sure that that's put in there on your joint venture agreement. And the third piece that I really want to illustrate as well too is this is obviously the fear that most people have is, hey, well, what happens if somebody dies? So in my joint venture agreement, it's outlined in there if something is to happen at death and what that looks like and what's going to happen. Now, my joint venture agreements, they're about 10 pages. I've sat down with my lawyer. We've gone through it in detail. But depending on my joint venture partner, sometimes there's things that I take out and sometimes there's things that I've added. But I have spent quite a bit of money to get my joint venture agreements to the point where I'm protected. And also, obviously, my joint venture partner is protected as well, too. Okay. Okay. So let's kind of switch gears again here now, because I want to get into, being prepared before you actually sit down with a joint venture partner. And I can honestly tell you, this was me in the beginning. I wasn't prepared. I wasn't great. People were bored in my in the meetings that I was having with them when I was going to Starbucks or where it was. I wasn't saying the right things. I went in with this big, huge sales pitch. I was attacking the logical stuff. Why doesn't everybody see what I see now that, my philosophy has changed and that real estate investing is doing so well for me. Um, and what I'm trying to really get across to you is that I made a lot of mistakes in my early meetings. Okay. But you don't need to have a batting average of 1,000 to win. Okay. Now, here are the mistakes that I made in the beginning, and I want you guys to not make these same mistakes. Okay. So I was always now, because since I wasn't in the stock market anymore, I was telling everybody, look, the stock market's going to crash. So you got to get your money out of there. Your RSPs are not doing good. So you need to get that out of there as well, too. Um, and then I was talking about the management fees and their mutual funds and how it's chewing up all kinds of money and, get your money out of out of mutual funds. And so pretty much what I was doing was I was attacking everything that they were invested in. Um, and I'm telling you, don't do that. Okay. Here's what you need to do, because here's what I was doing. I was attacking the left side of the brain, which is the logical side of the brain. What you want to do is you want to stay more on the right side of the brain, which is the emotional side. And how do you do that? Very simply. And it took me a couple years to really understand this. But what I did was I sold myself, right? And people will buy with you if they believe in you. Okay. So you don't have to educate. All you got to do is just go in there and tell a story. So what I did was I got really good at understanding the story that I wanted to sell. And that's what I did, you know. Now this was hard for me in the beginning. I won't lie, but I came up with a nice story. It was a true story, but it was a story nonetheless of who I was and the journey that I was on. And listen, if you want to ask people to hand over hundreds of thousands of dollars, okay, and that's what I've done over the last 10 years, this is a must. This is how you're going to be able to do it. So now you're probably saying, hey, Gary, look, um, what if I don't have a story to tell? You know, what do I do? It's easy for you because you've done this. Well, listen, it's very simple. Here's what you do. If you don't have that story to tell, and listen, and I know everybody in this call, you guys all have a story. You just have to find that story. But let's say you don't have that story yet, no problem. So here's what you're going to do. Very simply, okay, is sell your team. So how do you do that? Well, very simple. We, myself, we own Smart Home Choice. So if you were a part of our group, you could say, look, I have an accountant, I have a lawyer, I have contractors, I have a mortgage agent. Or if you're part of another group, that's what you're going to do. You're just going to sell that team because your joint venture partner, he may not be interested in coming out to the events and the seminars and webinars, like I said earlier, right? So this is what you're going to sell, that you have everybody in place, okay? And here's what it comes down to, is it possible to find a rich hermit? The answer is no. People need people to be successful. Okay. Here's the other important piece that you need to know before you go into your meeting. And I learned this from one of my other mentors, which is Joey Ragona. And he told me, okay, know your JV avatar or know your joint venture avatar. Who is he? Okay. And what you want to start finding out is, well, how much money can they invest? That's an important piece before you get into that meeting, right? Do you want them to be hands-on or do you want to be hands-on? Like, who do you want to be the manager? Because there can only be one manager. They can't be two. That's when things start to really deteriorate rather quickly. The other piece that's important is, what's the time horizon? How long do you want to hold this property for? Because it may be completely different for them. Maybe they only want to hold it for 1 year, but you want to keep this thing in your portfolio for 20 years. How much income do you need your joint venture partner to have? Maybe you only need them to be making 40 or 50,000 because you're investing out in, I don't know, Belleville. Or maybe you're investing in Durham, so now you need them to be able to make 100 or 120,000. The other thing that you need to really understand as well too, and I guarantee this is going to come up, so you need to understand this, is knowing your 5 whys. Okay? Because they're going to ask you, why you? Why should they invest with you? What is it that you offer that somebody else doesn't? You know, and like I mentioned before, you're the expert. You're the one who's going to seminars. You're attending the webinars. The other one is why now? You know, where's the interest rate going? Is probably a question that they could ask. You know, is there a correction coming? So you need to understand and be able to answer those questions. Why this market? Where are you investing? Are you in Peterborough? Are you in the Durham region? So they're going to want to know that. What's happening in Peterborough? Well, the 407 is coming through. Here's the job sector. So you need to understand that. Why this strategy? You know, what is the strategy that you're implementing? Is it rent to own? Is it single family? Is it multifamily? Is this 2 units? Is it flipping? And the last one is why this deal? You know, why this particular home that you found? Why is it that this investment property makes the most sense out of everything else that's available on the market? So really understand these 5 whys. Okay. Here's another thing that you really need to understand as well too. And this here, I can say, is probably one of the most important pieces to understand in your conversation that you're going to have with your joint venture partner. Okay. Here's what it is. Okay. And I want you guys to, if you can, jot it down, memorize it, record it, whatever it is that you're going to do, because this is worth the whole presentation tonight. Okay. And I want you guys to master this. If you can describe somebody else's problem better than they can, subconsciously, they believe you know the solution. And number 2, people rarely remember what you said, but they will always remember how you made them feel. Those 2 phrases are so important. Okay? I want you guys to remember that. And when you go in your conversations, keep those 2 things. And I'm telling you, those comments there are gold. Okay? So now you're getting into the conversation. You're sitting down and you're with your partner. How do you control the conversation? How do you start that conversation off? Okay? And here's what you're going to do. This is what I did. And all this stuff that I'm teaching you guys took me years to really understand and to master. But here's what you're going to do. Okay? You're going to start off with family first. And you're going to keep it short, sweet. And here's what I do. I talk about maybe for this stuff about maybe say 30 minutes or so, sometimes maybe even a little bit longer. But I just want to break the ice. I want to know what's going on in their life. I'm not really too much concerned with happening in my life. I'll get to that later. And even if they kind of bring it over to me in that first, say, 10 or 15 minutes, I will actually push it aside and kind of move back over to them, but just by asking them questions and trying to know who they are. Then the next thing I'll do is I will get into a very small pitch, right? And just that quick kind of an opening line, you know, say, so Gary, what do you do? And I'll say, hey, look, you know what? I just help people from losing money with their mutual funds and RSPs. And that is a nice icebreaker. Now, I'm not saying you have to use that, but that's one that I've used over the last few years, and it's worked incredibly well for me, because then they just want to know more. It's like, well, you do? Well, how do you do that? And then I get into what it is that I do. And then the third thing that I do, this is incredibly important. This took me, I don't know, maybe about 3 years to really figure this piece out. And I can tell you, again, this part, really important. I just draw pictures. And let me show you and go through a scenario of how I do this, okay? So here's how I do it. So number 1, okay, we're going to say that my joint venture partner, his name is Roger. Okay, so this is Roger here. So I'll say, hey, look, Roger, look, you own your own home, okay, and I know that you've got some equity in it, and if you were able to take some of that equity out, you'd be able to get a home equity line of credit of, let's say, $160,000. What you can do now is you can take that equity and you can go buy your investment property. But you know what? Just because your first investment property, we're going to keep it simple. All we're going to do is a single family home. Okay. Now from there, you still got some money left over in your home equity line of credit. So why don't we go buy another property? But now that you're a little bit more experienced, I tell you what, why don't we maybe do a student rental, right? Because we're not getting a lot of cash flow on that first one, but the student rental is going to bring in some extra cash flow. And then from there, we're going to hold this for a couple of years. The property is going to go up in value. And guess what? We can now take out some money out of this student rental. And guess what we could do with that? We can go pick up another property. And then from there, just because we got a little bit more experience, why don't we kind of bump this up, get a little more cash flow as well too, and let's do a 2-unit instead. Okay? I'm telling you, every single time that I draw this out on a piece of paper, at the end of the conversation, they always say, Gary, can I take this home? And why do they do that? Because guess what? They want to now try and get their partner on board. And it's so much easier for them to show them the picture of people and a house and a line of credit and what it's going to do for their future. Okay? So remember this, draw pictures. The other thing as well too that I see a lot of people make mistakes with is the pro forma. So when do you bring the pro forma out? Do you bring it out at the beginning of the meeting? Do you bring it out at the middle, or do you bring it out at the end? And here's where you're going to bring that out, okay? At the end, at the very end, okay? You're not going to sit there and explain this to them. All you're going to do is once you guys are getting up, say, oh, hey, listen, Roger, I got a pro forma here. This is the property that I'm currently looking at, or this is a deal that I just recently did with one of my joint venture partners. Why don't you take it home, take a look at it, and if you have any questions, give me a call, and then we can go through it together, okay? I want you guys to remember that. Do not explain it to them. You don't need to. Now, I'm not saying you don't understand how to explain it to them, but just don't do it. Not for that first initial meeting. Just send them home with it, okay? That's why you do it when you stand up and say, oh yeah, look, by the way, here's my pro forma, okay? And then the very last thing that I'll always ask any of my joint venture partners, right, that I think is going to be a good fit, and maybe not right away, but whether they are or they're not, I'll always ask them for permission, okay, if they would like to be added to my database, so that if I do come across any deals, that I can send it to them, okay? And here's what I did, because when I first started Smart Home Choice only had like maybe 8 email addresses on there. Okay, one was my Gmail, one was my Hotmail, one was my Yahoo, 2 of them were Darlene's, and the other 2 were my kids. That was it. Smart Home Choice had a database of about 7 or 8 people in the beginning. Okay. Today, I have hundreds of investors that I can now market to anytime that I'm ready. And this is how I've been able to grow my portfolio and to be able to talk to potential investors and go out and meet with them and educate them and bring them along on that journey with me. Okay. So the database piece, incredibly important as well too. And before I wrap it up, okay, I think I got through that in about 45 minutes. That was a lot of information there. But before I wrap it up, I want to share something with you guys. This is a deal that I just recently did out in Oshawa. Actually, not recently, but a year ago. And I want you guys to understand this, okay? Because people always say, well, when should I buy? I want to try and see if I can time the market. Let me tell you something. You cannot time the market, so don't try to time it. I bought this home in April last year with my partner. The worst time that you can possibly buy an investment property, okay? I couldn't have picked a worse time, okay? And I did it, okay? Even with all the years of experience that I have, I picked the worst time to buy an investment property. But take a look at the numbers here, right? So my partners put in 100% of the funds. Darlene and I, we didn't put anything into it. We had to renovate it. I put in 50%, they put in 50%, and we're splitting everything 50-50. But even though I bought it the worst time, our cash flow was 1150. We split that in 2. I don't know, what does that work out to? 575 or something like that. So once we're able to, because it's not there yet, but once we're able to now pull the money out, our Darlene and I's return on our investment is infinity. And that's what you can do when you really get a good understanding of joint ventures and how to structure it. Okay. Now, that was a lot of information. So I kind of threw all that together for you guys. I hope that helped. But if you want to learn more about it, there's, and I guess this is the part of the night where, when you do a webinar and you get into the whole sales pitch. Okay. So this is what I'm supposed to sell you guys. But I tell you what, I hate selling stuff. So here's what I'm going to do tonight. I'm not going to sell you guys on anything, but I am going to sell you on this. Okay. If you want to learn more about joint ventures, um, Chris and myself, we actually do an advanced class where we go into a little bit more detail on joint ventures. It's more interactive, and it's actually a really fun night. And we start the set around 6:45, and it goes to around 9 o'clock. Okay. So it's a good 2 hours of a lot of content. Now, if you say, hey, look, Gary, you know what? I'm not ready for the advanced stuff yet. I'm brand new to this. I just want to maybe kind of do this on my own, or I just want to pick up my first property and I'm not ready for the whole joint venture stuff. No problem. The day before, so Tuesday, April the 24th, we're doing a beginner's class. Okay. So if you want to register for any of these classes, just go to my website, which is smarthomechoice.ca. Register. There's a tab at the top. I believe it's events. So just click on that, and you're going to see all the events that we have for the whole entire year. All right. And with that, that's it. So you know what? If you guys have any questions, feel free to fire them off. I know we went through that rather quickly, but I hope you guys got some good information, some good content out of that. That's everything that I've learned in the last 10 years. That's really helped me to grow my portfolio. And I'm just honestly, I'm here to share this with you guys for free. And that's what I'm here for tonight. Okay, so if you have any questions, you guys can unmute yourselves, fire away, or if you don't want to talk, feel free to type in the chat box there. Okay.
Hey Gary, can you hear me?
Hey,
Hey, it's Keith. I met with you last night.
hey, Keith, how's it going?
I'm good. I did have a question, not directly related to the content that you just went over,
Yep.
but I'm a big fan of podcasts. I listen to them during my commute, and I wanted to know on your website. I tried to search for you on the podcast app on my iPhone. I couldn't find anything, so it's just all on the website. Do you know how to record those by any chance?
How to record the pod? What do you mean record them?
Record the podcasts.
Well,
So essentially save them and then I can upload them to my phone and then I can listen to them during my commute.
yeah, you know what though? If you go to my website, did you see the link there where it has the podcast? If you
Yeah.
click on that, you can listen to it right there from our website.
Yeah, I'm wondering if I can save it though.
Oh, okay. You want to be able to download it so it doesn't chew up your data?
Exactly.
Yeah. Okay. Good question. So that's what I meant by in regards to expanding my podcast reach this year.
Okay.
I am going to be going to SoundCloud, and I'm going to be moving over to iTunes because I don't have it on iTunes right now. I think there's another one, Podcast One. So I'm going to be going on to a number of different sites. So then that way
Okay.
you will be able to download it. Yeah,
Okay.
because
Perfect.
I have been asked that question before, so it's something that I'm working on. I'm rebranding it. It's going to be like a whole new intro and picture and all that stuff. So it will be available to be downloaded.
Okay. Perfect. Good to
Yeah,
know.
yeah, no problem.
Hey Gary, it's Ron here.
Hey, Ron,
How you doing, Gary?
good yourself?
Pretty good, pretty good.
Good, good.
One quick question.
Sure.
As you know, we've already got a couple properties and stuff. We're sort of looking at starting joint ventures. So just one question: how do you get your first initial investors? Like, do you advertise or is it through networking? How do you get your first initial interested investors?
Yeah, it's a good question. So here's what I did. Okay, do you have Facebook?
Yes.
Okay, that's where I started.
Okay.
I reached out to everybody on my Facebook. I'll tell you how Smart Home Choice got started. We used to do our meetings right in our living room, and I bombarded people every month whenever I was hosting a meeting, and that's how I started every month. And what I did was I did it individually. So I would say, um, hey Ron, I'm having an event this Wednesday, da da da, and I would individually do every single one. And when I was doing that on the GO train, so I had time to actually sit
Wow.
there and type it all out. And I religiously did this for about 8 to 9 months. And then at the end, everybody on my Facebook page knew that I was into real estate investing. That's how I did
Okay.
it, right? So now whatever format or however you want to do whatever message that you're looking for, you can do it that way. Number two, what I also did was I just went out for lunch with people, right? Because I had to eat anyways. So I'd go out and like I said, when I had the conversation with them at the beginning, the first 30, 40 minutes was just about them. And then I would get into what I was doing, right?
Right.
So like that first year when I became a real estate agent, and one of the reasons why I got Rookie of the Year was because that's all I did. I just kept meeting people. I would say 5 to 6 days out of the week, I was meeting somebody new every day off of my Facebook and Instagram.
Oh wow. Just from that, eh?
Yeah,
Wow. Okay.
yeah.
Okay. Yeah, that's a good start. That's what I need to know. Yeah. Okay. Perfect.
Hey, Gary.
Hey, how's it going?
Gary, it's Tony here. Great podcast.
Thank you.
Sorry, webinar. Late in the day. The four elements of your avatar, I think I only remember two, maybe because it's so late. So there was the income and the horizon. What are the other two?
Sorry, say that again.
When you looked at the avatar, you talked about four, I think four things. I only remember income and time horizon. What are the other two?
Oh, for the avatar. Okay, that was
Yeah.
for not for the wise, but okay. So it was time horizon. It was. You know what? I'd probably just easier if I just go right back to that slide because I'm trying to remember what it was now. Right here. This one here. Right, Tony?
Yeah, that's the
Yeah.
one. Yeah.
Yeah, that's it right there. So how much money can they invest? Do you want them to be hands-on? How much income do they make? And what's the time horizon?
Okay. And I'm thinking that kind of uh, once you have an avatar, you kind of know where to find them. I think it's almost natural. I don't know in terms of your networking. Because if you want people who can invest 100,000, then that might knock off 60% of your list, and then you go after the 40 that you think have the 100,000 to invest. You know what I mean? It kind of helps you focus on who to go after.
It does and it doesn't, and I'll tell you why. Because the people that I thought would invest in real estate and be a joint venture partner with me, a lot of times
Mhm.
were not the ones that would do a joint venture with me. It was usually the people that I didn't think were going to do a joint venture with me. It was very interesting. So then what I did was I was
Okay.
like, you know what? I'm just going to reach out to everybody because here's why. You may say, well, you know what? That guy only makes $30,000 or $40,000, and I get that.
Mhm.
But you don't know who's in their network as well too. So that's what I was saying before. Like
Okay.
I would just go out for lunch. Maybe I'll just meet with an old friend, have lunch with them, have a chat with them, explain to them what I'm doing, and then all of a sudden you're like, yeah, you know what? I don't have the money, but my aunt's really interested in this, right?
Okay.
So that first meeting sometimes can just be to um, you know rekindle that relationship, and then now if that aunt is the one that may potentially have the money, right? That's where now you go unprepared, right?
Good
So
point.
so
Good
right.
point.
Okay. So it all depends on who that person is, and but I wouldn't discount anybody.
Okay. Because it's the person and their network, not just them. That's what I'm
Right.
hearing.
Exactly.
Okay.
Exactly.
All
'Cause
right.
once you build a good relationship with that one person, you now potentially have access to their entire network.
Okay. All right. Thanks.
Yeah, no problem.
Hey Gary.
Hey.
Hey, it's Nick. I'm from Hamilton. I actually just had a question about terms that you use for the not necessarily word terms, but when you're doing a joint venture, do you typically have like a 5-year term or like a 5-year minimum or a 3-year minimum? How do you handle that with your investors?
Yeah, that's a good question. So usually what I've done with most of my joint ventures is 5 years. And we put that right into the joint venture agreement. And the reason why we do 5 years is that's usually kind of a good time period for, when the mortgage comes up for renewal, just to kind of say, hey, look, you know what, we've been in this property now for 5 years. Do you want to continue to move forward with this, or, do we want to sell and separate and go our own ways? That's just a typical timeline. It could be shorter, but I would say 90% of the deals that I've done have been a 5 year, let's get together and figure what we want to do. Do we want to continue to move forward, or do we want to sell?
Right, right. Do you typically see any investors ask for like an early prepayment penalty for them or anything like that? Do you get into that deep of detail?
Uh,
Like for example, like I'm into multifamily properties like triplex or more.
yeah.
And if we're able to find properties with a lot of value add potential, where we're going to come in and we're going to rehab the property and put in new units, raise the rents, and basically like the BRRRR strategy.
Hmm.
Um, and say there was an example where there was an opportunity to refinance and buy out the investor prior to the 5 years. I guess that's something you would just include in your terms.
Exactly. Yeah. So you'd put that right into the terms if that's what you wanted to do, so that, let's say, you know that you weren't going to see a good return for, say, 6 years or maybe 8 years or whatever it may be. Then you can put that in there and then say that if you want an early exit, well, then there's a penalty for that. So that's
on
why,
on on the lender side, like on the investor side, if they want out early,
right, you'd put that in the joint venture agreement.
right,
So you'd put
right,
something in there. So that's why, even if I was to give you, like, or you to get a joint venture agreement off of the website, or you get it from another club or whatever it may be, you always want to sit down with a lawyer and go through it.
for
And then
sure.
also have that conversation with your partner and say, look, what's our time horizon? Are
Right,
you good with 10 years? And if they are, okay, cool. But then, you say, well, look, if one of us has to get out early, 2 years or 3 years, because life happens, right? Sometimes
right,
you do want to stay in it long, but sometimes life happens. And if that's the case, well, then maybe there should be a penalty, because I now have to find another partner, or I get to sell this property and I really want to keep it because it's now kind of, uh, you know,
it's reached
changing the
this point. It's
fundamentals of
really,
my retirement.
yeah, yeah. So I guess it just all comes down to the specific deal. Like you can really make a joint venture agreement, whatever is agreeable between yourself and your partner.
Exactly. Yeah.
Right, right.
There is
Okay,
no right or wrong. There really isn't.
right.
You know.
Okay, that's great. Thanks.
Yeah.
Awesome.
Yeah. Thanks for the question. Any other questions? I got 3 more minutes. I don't mind going right till 9 o'clock.
Hi, Gabby.
Hi.
It's here.
Who
How
is
are
it?
you? Vlad. Can you
Hey,
hear
Vlad.
me?
Yeah, I can hear you. How you doing, Vlad?
Good, good. How are you?
Excellent.
All right. Yeah, nice presentation. Really nice topic. I'd like to know, you mentioned about mentors. So
Hmm.
what was the role of mentors at the beginning, and like how did they help you? And maybe you can a little bit talk about this.
Yeah. So the role of the mentor for me in the beginning was, I didn't know anything about real estate investing, and you start to, at least for me anyways, in the beginning, I was just asking people at work questions on how to do this, because somebody there would have an investment property, but I mean, they weren't part of no club. They weren't hanging out with people that had 10, 15, 30 properties. So what I ended up doing was, because I wasn't getting the right answers from those people and I was making so many mistakes, and I was getting to the conclusion that, oh my God, real estate investing really is a very difficult business, and that you shouldn't do this because it's just hell. I went out and then I found somebody that had 20 plus properties, and it was inconceivable to me. And I just started to hang out with them and started asking them a lot of questions. And they said, hey, look, you know what? I don't mind. I'll take you under my wings and I'll show you a few things. And then from there, I found clubs, which really helped as well too. And then the biggest change, where I really saw leaps and bounds, was when I went with Joey Ragona. So he does a lot of coaching, and I went with him, and it cost me a pretty penny. Yeah, I was paying about $1,000 a month, and I'm not shy to say that. But he shared a lot of really, really good information with me, a lot of good insight. And now, I worked with Joey for about 2 years. But I've now since left Joey, and now I'm looking for a new mentor because I'm really big on mentors. I think mentors help you get and allow you to break through barriers that you didn't know or know how to. Because if you're not on that side, how can you break through it? You can, but it's very difficult. But if you have somebody that's already gone through it, well, then they can just navigate that so much easier for you. So I actually sat down today with one of my new mentors, and he's been coaching me. And I'm telling you, it's you think you know a lot, but when you talk to somebody who's where you want to be, my God, you can learn so much so quickly. It's
Right.
like, yeah, like I was sitting down with him today, and it's like literally drinking from like a fire hydrant. I'm like, I can't believe I can learn all this. Like there's that much more information out there. It's incredible. And that's what a mentor is all about.
At the beginning, did you shadow them, or did you just meet and then kind of have like little sessions of
Um,
learning?
Yeah, no, it was more like one-on-ones, some over the phone or video. Then we would also do face-to-face. Joey would do closed door sessions for like 10 hours in one day where you're sitting down with other entrepreneurs. Those are really good. If you can find somebody to do that with you, or find a group where you're staying in a room with 5 or 6 other entrepreneurs, uh, you can learn a lot in those type of settings. A lot.
Great. Thanks, Gary.
Yeah, no problem. All right. You know what? We are 9:01, so I'm gonna keep true to my time. That was a full hour there. So I want to thank everybody for joining tonight. I hope it helped. And listen, if you guys have any other questions, or even if you guys want to sit down with me and maybe grab a coffee, I really don't mind. My schedule is crazy, so it might take some time to kind of set it up. But I don't mind if I can help point you in the right direction and maybe kind of help you guys kind of break through some barriers that are holding you back or you can't get through. Just send me an email. My email is right there on that screen. Okay, I have no problems whatsoever with that. All right, so with that, I got to go pack. I'm taking off. I'm jumping on a plane in about 30 hours. All right, and everybody, you guys have a great night. Thanks again.
Thanks, Jerry.
Take care.
Thanks.